Well, I guess it was a tough call to make, or maybe a brave call to make, right? Because a lot of people at the peak were calling for recession probabilities to go up, and there were calls for stress test scenarios of what if we stayed 120 plus barrel of crude oil. And I think what we ultimately looked at is, fortunately, that we went into this largest supply outage with buffers. And whether it's the inventories that we had on hand, and we could cover 200 days worth of net imports. And so that, allowed for a lot of cushion that, in my view, would have prevented us from going into a recession. And then the other side of that is, we never, and I don't think really anybody thought that this conflict would drag on for quarters and quarters and years. We know that there's a political time clock, and, there's a level of market patience that was going to force a resolution at some point. So I'm glad to see that we are here. And it's been a stunning turnaround in the price of oil, Tom, to your point, from 120 to now, the forward strip pricing in $75 average for the back half of the year. That is a much, much better backdrop, fortunately, for risk assets now.
So I guess investors are probably, over the last several days trying to reset a little bit. And what do we focus on now? Is it earnings? What do we focus? The Fed, we heard from the Fed yesterday. They're not going to give us any love there. So what do you think the market's focusing on these days?
Well, I think it is that interplay between where we are with the state of the economy and where we are with the state of interest rates. And the focus should be on the strength of economic activity, first of all, whether you look at the consumer and this continued momentum that we see there, whether you look at the corporations and the great earnings season that we just came out of. You look at the upsizing of earnings estimates, for example. And then there's the CapEx story. If you look at the last quarter's GDP, the kind of the bright object there has actually been the fixed asset investment. The CapEx is accelerating in the U.S. thanks to hyperscalers, but also others. So that's the economic backdrop. That's why I think you stay in the markets. The other side is the Fed. And look, my take on that is the markets have interpreted this as this is hawkish guidance. We're going to hike rates. It's not guidance. As you know, there was no forward guidance. And I think a lot is going to change in the next few months.
Anastasia Amoroso with us. We will continue with her. Edward Yardeni to join in a moment. Futures up 55. The VIX is surprising. I thought it'd be it's in a stick, 17.27, but it's screaming 16 handle to me. The Bank of England just does a 7-2 vote. Megan Green, who's been on the show many times, and Hugh Pill, a few pill times over the years. But Megan Green and Pill vote against it, looking for a rate increase. Bank of England stays static. Pound retreats, gilts retreat. And Paul, it goes to this idea of a backdrop of fighting inflation.
Fighting inflation, Tom. So, Anastasia, one of the issues for this market is AI. And we're trying to figure out, obviously, investors, how to play it other than NVIDIA. And it's been an ongoing, I think, play for this marketplace to figure out where do we go? How do we play it? How are you guys thinking about it these days?
I mean, look, there's actually so much more to do in both public and private markets beyond NVIDIA. First of all, one thing that's happened, Paul, is over the last few years, the total addressable market for semiconductors because of AI has expanded. So it started with GPUs, but now, as we know, the total addressable market for CPUs, for memory chips, all of that is being upsized. So that trade on its own has broadened out. Then you think about the infrastructure. And, look, there was the first leg, I would say, of the data center opportunity. And, there's some concern about maybe we've done too much too fast. But the reality is, looking ahead, what's happening is we're transitioning from the use of chatbots, the conversational commerce, to the use of agentic AI and workflow automation. And what that does is it's likely to drive much more token consumption over the next few years, and that's going to require a whole lot of compute. So the next phase of the data center build out has to support this move to agentic AI. So we're absolutely looking at data centers. We have several portfolio companies in the space, and they're seeing very strong appetite for their compute capacity.
Partner Group is out of Switzerland. You've got a handle on continental Europe because you have to go over there and speak to people about American exceptionalism. Do they still want to buy American after all we've been through with the president and the war?
Yes, the answer is yes. And look, there's been a kind of an evolution there, but absolutely. And I was in Europe recently, and look, when you think about Europe, you've got extremely depressed consumer confidence. You have sluggish consumer spending. You have the ECB that hiked rates presumably or arguably they shouldn't have. You don't have the CapEx momentum. You don't have the supportive corporate tax rates. And then if you flip all of that around and look into the United States, we've checked all those boxes. So I think that's why, whether in Europe or the Asian investor, you continue to look to the United States, not for the political backdrop that we have, but for the economic backdrop that we have.
What are we doing with emerging markets here? Because that's been a play really for the last, couple of years. Emerging markets have done very well.
Yeah, I think some parts of emerging markets are quite interesting, and let's kind of extend the AI trade to Asia, for example. I was also recently in Asia, and you look around, and 60 or 70% of what we need to actually build out AI infrastructure is manufactured right there in Asia. Whether it's data center chips, whether it's servers, whether it's all the components.
Right.
So I like emerging markets that are enabling that tech trade. Then selectively, I wouldn't say that you just invest in all emerging markets, but if you can identify a theme, for example, we have invested in a company in Brazil, which is a fintech company, because guess what? Scaling in fintech is not just a U.S. story.